All right, welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all around raging capitalist. And in today's video, I am excited to be serving up your piping hot July monthly Bitcoin digest. Disclaimer for folks who are new to the channel or new to this series, I do these videos every month just to kind of cover some of the key happenings and themes in the Bitcoin universe. The intention here is not to predict any sort of near-term price movement. You've got billions of alternative videos out there and content creators looking at pretty squiggly lines on charts, trying to hash out where the price is moving. So the point of these videos is not to get into that, but rather to go deeper into the fundamentals, of the Bitcoin blockchain itself, some of the different technologies surrounding it, adoption, news, trends, institutions, all that good stuff. And really the purpose is to kind of arm you with an ever deeper understanding of this magic internet money, which is the key for conviction. As many of us are hodlers out here. So, plan for today, we're going to cover, first and foremost, the sort of great mining migration out of China. Fascinating what we're seeing unfold before our very eyes. We're also going to go into some of the different on-chain metrics, which can point a little bit to price, but again, they get even deeper to what's actually happening on the Bitcoin blockchain. And then we're going to look at a couple other, smattering of adoption-related news and things coming up. So there's a lot to cover, as always. Buckle up. For those returning to the channel, welcome back, my friends. As always, it is great to have you. And for those new to the channel, welcome to you as well. I hope you find this content valuable and interesting. If you do, I invite you to consider subscribing, as it really does help get these messages out to more folks on their quest to becoming financially sovereign, which is what this channel is all about. So with all of that out of the way, let's go ahead and dive into our first topic around Bitcoin miners and the migration out of China. All right, so let's talk about what has been dubbed as this great migration of Bitcoin miners out of China. This goes all the way back to May, when quite high-ranking Chinese government official sort of came out with guidance around cracking down on Bitcoin mining in the country, etc. And at the time, a lot of folks who have seen this movie before, back in 2017, and even earlier, with China sort of demonstrating this crackdown rhetoric, a lot of folks sort of said, oh, it's just the same kind of, FUD being played out today. But as we've seen since that May kind of announcement and guidance, this is very much real. And we can see that in the Bitcoin hash rate chart here. This is a 7-day moving average of exahashes per second. So this is a sort of standard way of quantifying the amount of computational power going into the Bitcoin network. So you can see the y-axis there. An exahash is like 1 quintillion hashes per second. So I mean, these are massive numbers. But you can see since the peak in about May, where it hit roughly 180 or so exahashes per second, it has plummeted about 50% to where it currently sits at roughly 90. It's important to note, hash rate is difficult to directly measure, but it is computable via looking at how fast blocks are being added to the Bitcoin blockchain, which we'll get into. But the key takeaway here is that this is a significant event. We have never seen this degree of drop off in hash rate. And so it sort of begs more questions because, of course, part of Bitcoin's core value proposition is its security, this sort of impenetrable wall of cryptographic energy that is serving to secure the network and secure the sort of state of the blockchain, i.e. who owns what. And so this is really, really important and significant. And indeed, as I was alluding to earlier, right, this is not just kind of rhetoric. This is actually happening. A lot of folks were skeptical initially, but we can see in this article highlighting the Xinjiang region, you actually have like real enforcement by local governments, taking a nod from the Chinese Communist Party sort of government overarching in the country. And so this is pretty interesting. Inner Mongolia, you're also seeing actual kind of real enforcement. And so right now, it's estimated that about 90% of the, kind of Chinese hash rate has gone offline, which is just wild, right? Consider that, China arguably was probably about 60% of the global Bitcoin hash rate prior to this event. Now, what is happening? I mean, is Bitcoin dead? Well, no. The beauty is a fewfold. Number one is, you have miners that are now seeking more favorable jurisdictions to conduct their business activities. And in fact, for many of you watching from the U.S., there are miners coming to places like Texas and Florida. And so this is very, very interesting. I think for a lot of folks who have said, okay, sure, Bitcoin, but it's centralized in China and the Chinese government's going to take it over. Like, this should be a very obvious rebuttal to that concern, that not only is that not true, but you're literally seeing miners relocating as we speak, again, to places like the U.S., Kazakhstan as well, which is neighboring to China, has very cheap energy. But it's pretty interesting to sort of see this play out. You can see an example here from Greg Abbott, the governor of Texas, who has continued to voice support for Bitcoin and the broader kind of industry. So it's really, really neat, right? I think ultimately it is a good, event for Bitcoin. I'm not going to get into it in this video, but when we talk about decentralization, right, there's mining hash rate, but then there's also nodes that ultimately validate transactions in blocks. And so I don't think there was ever a question around the decentralization of the nodes. But a lot of folks would still point to this concentration of mining activity in China as a threat to Bitcoin. And so this very much squashes that concern. And it's nice to see this activity flowing to hopefully places that are going to embrace the freedom that Bitcoin represents. We can see all of this impacting what's called the Bitcoin mining difficulty, which plunged by 28% in response to all of this happening. This is a really, really important topic, and so I'm going to spend just a minute here for those of you who might not be familiar with how this works. So roughly every 2 weeks, you have an adjustment to the difficulty of how hard is it to add a new block to the Bitcoin blockchain. And so this is an incredible mechanism that calibrates based on the amount of mining activity that's happening, to ensure that on average, a new block is being added to the Bitcoin blockchain roughly every 10 minutes. So, on average, this is probabilistic. And so all these kind of hashes that are happening, as we were looking at earlier, all those hashes are trying to sort of find a resulting number, essentially, that is less than a given target. And that target is what's changing based on the difficulty adjustment to either make it harder to find that solution when there's an influx of miners and a lot of new capacities come online, or in this case, it's actually making it easier to find that correct hash in order to win the right to put the next block on the Bitcoin blockchain. So again, without going into the gory detail there, like, this is a profound sort of genius mechanism. Even if you think of something like gold, which is relatively stable in its supply and sort of new issuance of gold, it's still the case that if the price of gold, denominated in fiat goes up significantly, you're probably going to have a lot of sort of gold miners coming into the fray, thereby increasing the supply of gold, thereby having an impact on the price of gold itself. Bitcoin has no such dynamic, given that its mining difficulty is dynamically adjusting. So this is super, super cool. And so I think this is a test of the resiliency of the Bitcoin network. And thus far, it's proving to demonstrate that quite clearly. Blocks are still going up. like clockwork. There was some delay prior to the difficulty being adjusted. You had blocks going up instead of 10 minutes, maybe 30 minutes, 40 minutes, maybe even an hour. There was one block that took 2 hours, right? And people were saying, oh, Bitcoin's, is it dead, right? And so the answer is, of course, no, and this is very cool to see. And so with that, let's go ahead and switch gears now to some of the on-chain metrics that also help tell the story of what we've seen with the Bitcoin blockchain over the last month or so. All right, so let's dive a little bit into some of the on-chain metrics, which I've grown to really like as just ways to understand some of the fundamentals behind how market participants are acting, in the context of Bitcoin. And so, bridging from our last section, a lot of folks have thought or postulated that the Great Migration, as it were, is probably a suppressing force on the price of Bitcoin. Imagine being a miner in China and having to literally pick up your capital intensive business, ship it halfway around the world. Like, that's probably fairly expensive, especially when shipping rates are elevated given all the challenges that we've seen with some of these supply chains. And so, for an entity that has their corporate treasury as Bitcoin, like, that's what they're going to sell if they need to raise cash. So very plausible kind of thinking there. I've yet to see evidence that is sort of massive. I think it's probably safe to conclude that some of that has happened indeed. But in terms of like causing the declines we've seen, I don't think there's as robust evidence out there. And so it begs a question like, well, what's been happening, just to give a better understanding of where market participants' heads are at. And so another kind of commonly believed notion is that retail is to blame, right? Weak-handed, jelly-handed retail investors. And as William Clemente, one of my favorite, on-chain analysts, kind of goes through, this is actually really not the case. It's not, supported by the data. And so if I zoom into this chart here, you can see these different bands. So each of these lines represents the supply of Bitcoin held by entities with a certain balance. And so this ranges from 0.001 to 0.01. You've got another line in green for 0.01 to 0.1. And then you've got a final line here for 0.1 to 1. You get the point. But as we can see, the supply held by these entities has consistently gone up. You really haven't seen any decline here at all. And this is actually, quite compelling for the idea that, we're not done with this bull run, which many folks, including myself, believe. And so that's interesting. And I think the deeper point here is that retail appears to be more resilient, this time around, whether we see that, consistent in months or a year from now, who knows? But that is encouraging to see. And so therefore, what's really happening here is that it's more the whales that have been selling. And you may think, oh my gosh, yes, that can't be good. Well, for one, you've got the number of whales declining. So in the orange line here, we're looking at the number of entities with a balance greater than or equal to 1,000 Bitcoin. This is a fairly commonly agreed upon kind of definition of quote unquote whale. And as you can see, this has really gone down since, pretty much since February. Now, importantly, we need to pair that with this following graph, which Willie adds some commentary to. Num num num, Bitcoin so yummy today. Let me zoom into this graph so you can see that instead of the number of entities that we might call whales, this is the supply held by those entities. And indeed, we can see, that same sort of peak in February has come down, but has actually stabilized around mid-May, and has remained fairly consistent and has actually gone, spiked way up over these last couple days. And so what this tells us is that if the number of sort of whales is decreasing, yet the supply held by the whales is stable and in fact increasing most recently, this suggests that there's this kind of bifurcation within the whale group. And indeed, this kind of final bit ties all that together nicely This is the Bitcoin liquid supply ratio, which is essentially a ratio of the coins held by what Willie calls Rick Astley. So, the popular meme, never going to give you up, versus weak-handed speculators. And again, if I kind of zoom into this, we can see that the blue line up above being price. I know the y-axes aren't here, and that drives a lot of folks crazy, including myself. But you've got the price plotted against the ratio of kind of strong hands to weak hands based on the length of holding of different coins. And so this is pretty interesting. You've got now a pretty clear story that it really wasn't retail. Retail kind of just stood there and took the drawdown. So retail was actually surprisingly resilient, and rather it was some of these whale speculators that that had really led a lot of the selling activity that we've seen. However, that selling appears to be getting exhausted, particularly as these strong kind of buyers of last resort whales are picking up Bitcoin on the cheap. And so ask yourself the question, right? Like, are some of these whales going to kind of YOLO into buying a bunch of Bitcoin if indeed we're going into kind of a multi-year bear market? Probably not. And so again, this just puts some context around what's been happening. And this is also supported by a view here of the balance on exchange. Now, this is not a perfect metric. This can fluctuate for a lot of reasons that have maybe nothing to do with intention to sell or buy. However, it usually is a pretty good proxy. You can see this large upward tick around April to May in balance flowing into exchanges as an indication that these are entities looking to potentially sell. But you've seen that stabilize and indeed come down since kind of mid-May. We also have to kind of remind ourselves, as this research piece from NYDIG demonstrates, that Bitcoin's still up 19%, right, despite the big drawdown. This is year-to-date returns, and you can see how that stacks up versus other asset classes. Commodities has obviously had a very, very strong year-to-date with a lot of the inflationary pressures we're seeing, but still pretty darn good. And look at how that compares to a lot of the debt markets near the bottom. If you're holding bonds, you are absolutely you just hate yourself. Gold as well has had a pretty tough time. And so again, important to zoom out and keep the broader context in mind and not lose our shirts. What matters far more than any sort of fiat denominated price of Bitcoin is the size of your stack. How many sats do you have? That's really the ultimate kind of price that matters, because one Bitcoin is always going to be equal to one Bitcoin. All right, with all that, I know that was pretty dense and we jumped through a number of charts, but again, intended to really give a deeper understanding of what's happening in terms of these fundamental market participants and sort of groups. Let's switch gears slightly and round this video out with a few other kind of news pieces and happenings in terms of adoption. All right, so let's round this out with just a few other topics that I think are worth following. The first is this Grayscale kind of unlocking schedule. So Grayscale, for those who are not aware, was really the first in the US kind of fully approved institutional kind of investment option for Bitcoin through a trust structure. And so what this means is it's a sort of closed-end fund. And so what happens is if an investor kind of buys shares of Grayscale, which in turn sort of owns the underlying Bitcoin, they're buying this as kind of a vehicle, and those shares can trade at either a premium or discount to the underlying value of the assets that they sort of reflect and represent. Furthermore, there's this kind of lock period, in this case 6 months, where investors can't actually sell their shares. So that's quite interesting. You had this, I think we'll look back at this as a big catalyst of both the ramp up that we saw kind of earlier in this year, as well as the subsequent drawdown. So late last year, you had, the Grayscale Bitcoin Trust attract a lot of attention, a lot of momentum. And at the time, you had a lot of folks kind of piling in despite a premium that got upwards of 40%. And so people were sort of doing this carry trade where they're probably borrowing money on the cheap, buying into the Grayscale trust. There were traders doing this with an intention to go long Grayscale, short spot Bitcoin, right? There's a lot of different kind of configurations that folks tried to play with this kind of Grayscale trust structure. But as the price kind of came down in the drawdown, you've now seen that premium flip to a discount, meaning that the shares of Grayscale are trading at less than the value of the underlying assets of Bitcoin that they represent. And so given the timing of a lot of these purchases and that 6-month window, a lot of activity happened in December and January. And so really June and July, we've seen a lot of these kind of unlockings. It's a little hard to say like what this actually means for the price or even for Bitcoin itself. But keep in mind that Grayscale, I think they have like 650,000 Bitcoin. So this is significantly more than even like MicroStrategy, who we often think of as this kind of giant gobbler of Bitcoin. And so that's a significant amount. But keep in mind that once the Bitcoin goes into this kind of trust structure, like those who are selling shares, it's not like they're selling Bitcoin per se. And so a lot of folks who are writing, articles that, that sort of say, oh, this is highly bearish for Bitcoin. I don't necessarily know that that is true, but it's certainly something to watch and pay attention to, especially as we go through July. Some other piece I'm kind of watching closely is all this activity around NYDIG. So NYDIG is the Bitcoin arm of Stone Ridge Capital, and they have just been like on an absolute tear. Different partnerships with different players, including Q2, which provides digital banking services to a lot of financial institutions in the U.S. Alchemy, sort of same thing. Fiserv is a huge sort of payment processor and financial services provider. And so kind of through all of these partnerships that NYDIG has now done, as you can see this sort of takeaway here, like NYDIG would be able to support Bitcoin buying capabilities for close to 50% of retail banking customers in the U.S. And so this has all been scaffolding that's being put into play over the last several months. And so this is very interesting. Imagine like the average retail, individual who doesn't maybe want to go through the trouble of setting up an account on an exchange or, is, worried about whatever they hear or perceive in the news. And they just want to be able to kind of buy and acquire Bitcoin through perhaps a portal through their, bank or whatever the case may be. Like this is what's going to be enabled through some of these partnerships. And so I think that is a very good thing for broad kind of mainstream adoption and frankly increasing the accessibility to Bitcoin to individuals. Now, as always, keep in mind that, custodial control of Bitcoin has its massive downsides, not your keys, not your coins. And so, the fact that people will get access to Bitcoin is great. However, the, mission of education around how important it is to take your own custody of your coins is going to be equally important. And it remains to be seen what some of these developments, will impact in terms of the being able to custody your own private keys versus not. There's also the sort of nation state debate. So a lot of folks thought, Paraguay would be the kind of next domino to fall after El Salvador. There's this opinion piece here that I think is a good counter consideration to the idea that Paraguay is just going to turn around and kind of adopt Bitcoin as legal tender. It seems perhaps more likely that they will put in place legislation that is more favorable towards Bitcoin, whatever that ends up meaning. But I think we'll still see some pretty interesting developments on the kind of nation state level. Which is ridiculous to even say, right? Like months ago, I wouldn't have even uttered that in one of these monthly videos. So it's exciting to see how far we've come. And then there's some exciting dates coming up in terms of like SEC approval dates in the US for different Bitcoin ETF applications. I think Van Eck is coming up here in maybe a week or so. And the SEC kind of owes a decision to Van Eck's application. I don't think they can push that back again, if I'm not mistaken. So like that could be a catalyst that that is quite significant. So net, I think a lot of really exciting stuff. In future videos in the very near term, I'm going to cover a lot of the really exciting things happening in terms of building, companies building on top of or around the Bitcoin blockchain. That's just incredibly exciting. And so I think, out of all of this chaos that we've seen unfold in terms of the price over the last several months, the bottom line that I want you to take away is that nothing has changed. And in fact, the fundamentals are stronger than ever. You've got some of the world's smartest people developing, Bitcoin Core and developing companies, around Bitcoin. And so it's pretty exciting to see. With all of that, though, let's go ahead and conclude the video. All right, my friends, there you have it. We covered a lot of ground as promised. We went through this great mining migration out of China and what it means for Bitcoin. Ultimately, a really key test for the network's resiliency, but one that it seems to be taking in stride, as evidenced by the downward difficulty adjustment, the biggest we've ever seen in history. But it'll be very interesting to see how and when hash rate returns over the coming kind of weeks and months. And where the sort of chips fall in terms of mining, activity going forward, which is exciting to see. We also talked about some of the different on-chain metrics that tell this story around, explaining the price action we've seen, and then we rounded it out with a number of other kind of developments on the adoption side, all of which point to this idea that Bitcoin fundamentals are stronger than ever. So here's to hodling, as many of us are doing. I'll go ahead and leave this video here for now. I hope you found this content interesting, valuable. If you did, you already know what to do. Give this video a like, comment down below. Let me know what types of videos or topics or themes you'd like to see covered in the future. But for now, I'll go ahead and leave this here for now. As always, every sat counts. And until next time, I'll see you then.